Yes, Swasi, I think you can.
You can start.
Okay. Yes, so good evening, all the seniors and friends. Uh, my friends, Chairman Sunil, Speaker Mandar, and Convener Dushyant. Uh, I welcome all of you to this Wednesday lecture meeting. And before I go to a subject proper, let me briefly share with you the BCS background, the Bombay Chartered Accountants Society. It is a voluntary body of chartered accountants with 72 years of existence. It is known for its ethical governance and quality standards. In last 8.5 months or so of this pandemic, we remain relevant with digital programs. We conducted all our events, programs, lecture meetings, workshops without any cancellation. There may be some postponements, but no cancellations. Only with a change of physical to digital. The 14th Bombay Chartered Accountants Society GST RSC, the refresher study course, was originally planned as a physical event at Amritsar. However, due to COVID-19 situation, the same was conducted on virtual mode in July 2020. And we realized that the virtual platform brings a lot of discipline and the systematicness in the presentations. All the contents of physical refresher course were carried out, including the group discussion, and the participants surely miss the personal touch, the recreation of physical RSC. However, there was no miss as far as the contents, as far as the knowledge sharing was concerned. So as such, this was a main important refresher course. It was the first virtual course which was conducted by the Indirect Tax Committee. Similarly, our flagship event, the 54th Residential Refresher Course, has been planned between 7th January to 10th January 2021 for the first time on virtual mode. And for the first time, it is open to all, that is including the non-members. The early bird concession will be there up to 10th of December, that is tomorrow. So I recommend all of you to enroll for this very well designed program and experience the knowledge sharing of BCS, the quality standards, etc. Coming to today's lecture meeting, it is a timely event for GST practitioners and even the clients, the businesses, more particularly mid and small size businesses, though it is applicable to all. However, the MSME and SME is the focus area, has always remained, and the SMPs has always been a focus area of BCS. And with the purpose to provide an update on the latest developments in GST domain, to carry out the compliances with better understanding and with a proper update, we thought of this lecture meeting. And I must thank Chairman Sunil for his inputs and for giving a proper perspective to this lecture meeting. And thank Mandar, Telang, today's speaker, and my friend, that he accepted our invitation within few seconds. And it is my pleasure to introduce Mandar Telang to all of you. Mandar Ullas Telang, he is a partner, Gokhale and Sathe Chartered Accountants. He is a BCom, fellow Chartered Accountant and LLB. His area of practice is service tax, MVAT, CST, and GST. He is associated with many professional organizations in various capacities. He is a co-opted member of. He was a co-opted member of Indirect Taxation Committee of ICAI for the year 16-17 and 17-18. convener of Indirect Tax Committee of Bombay Chartered Accountant Society, an active convener, active member. He is a member of Indirect Tax Committee of Chamber of Tax Consultants, and he is a vice chairman of Journal Committee of Chamber of Tax Consultants. He has authored various publications such as Service Tax, Basic Concepts and Procedures, published by BCAS in the year 2015. Contributed to a background material on GST published by ICAI in 2016. He is a regular contributor to the professional journals, a legal decision column in Legal Update feature of Chartered Accountants Journal, our ICAI journal. He is a regular contributor to recent decisions, Indirect Tax Part A of Service Tax, now GST, featured in BCA journal, published by BCAS since August 2013 till date. And he is involved in various activities relating to GST. He has acted as a panelist, expert faculty, webcast, webinar and video lecture series, lecture meetings, refresher study course, GST certification courses, etc. by various organizations including ICAI, BCAS, CPC, ICSI, etc. He is actively participated in representation related to GST before central and state authorities, and he is a NASIN certified GST trainer. And he is also a managing committee member of BCAS and a very active volunteer. We always look at him for his inputs and for his participation and contribution. So thank you, Mandar. With this brief introduction, may I tell Mandar to present his thoughts. Thank you.
Thank you, Suhas, for a very detailed introduction. First of all, I am very thankful that you gave me this opportunity from this very forum. Most importantly is nowadays, because of all the online activities, we have, really speaking, lost track of the time. Okay, because when we are working from home, we do not know when our office hours starts and when our office hours ends. And at least my personal experience is that whenever we are executing something from home, it might take more time than what you would have otherwise taken if you would have worked on that particular assignment from office. The equation has undergone a lot of change, especially in terms of commitments to various works that you were supposed to deliver in the last year, in the current year rather. Because of these various problems or because of this unprecedented situation of COVID-19, where we are working with very limited staff, and even the clients are working with a very limited staff, and the most of the interaction is through an online mode, which I believe that we cannot, it's not very easy to replace the physical mode with the online mode. As a result of which, today we are using whatever time available to us in executing the assignments, which really speaking is very bad, but really speaking leaves us a very short time to keep a track of all these updates which are coming on a very regular basis. And if you ask me, GST is a most dynamic law, in the sense it's a notification based law. So that means every time change happen, it is only by way of a notification. You don't require a parliament to be in session for that change to happen. It's more industry based law, so therefore policy reasons depending upon the needs of the industry are required to be of the equal dynamic nature, and therefore as and how the industry changes, the industry's demands changes, the policy changes, the changes of the amendments in the law, in this particular law becomes necessary. If you ask me, in the last few months, government has come out with various measures. Some of the measures are more towards digitization of this particular entire activity. We have heard that in the past few months, a lot of I would say bad activities were unearthed by the department, by the government. Lots of raids happen, lots of rackets of the bogus invoices were came into light, and this all happened because when we are talking about the GST, the main thrust is on the digitization. The most of the processes are electronical, and now the emphasis on more and more artificial intelligence in these kinds of activities is increasing. And therefore, with this perspective, whatever changes government is bringing, we have to consider the mindset with which the government is bringing these changes, what is the basic reasons behind it. And no doubt, whenever we are talking about any sort of a digitization, not everybody in this country is a software engineer, not everybody is basically expected to know how the software functions. So even industries on a large scale are dependent upon the software vendors, engineers, who in turn provide us a solution to take care of whatever compliance related softwares that are required, or compliance systems that we have to have in our office in place. So at one side, some cost is involved, dependency on some software people is involved, dependency on the IT background is involved. On the other side, the objective with which the government is coming out with these sort of digitization is also extremely clear, that they want to plug whatever scams are happening as a result of manual intervention, or as a result of not close monitoring of the issues. So with this little bit background, I will start to the session of the day, where the first two important things that has happened in the last couple of months. Number one is that extension of your GST audit. So it was for GST audit 18-19, for the financial year 18-19, it was supposed to be completed by 31st December 2019 as per the original due date. That due date got extended to 31st of March. Due to the lockdown, again it got extended to 30th of June. So virtually that extension was a no extension. It was just that time was not existent. And then thereafter, from 30th June, it got extended till 31st of October, and then again various efforts were made by various industries, various professional bodies. The government was kind enough to then further extend it to 31st of December. So if you ask me today, so far as the GST professionals are concerned, I am sure most of the GST professionals are now busy in carrying out these GST audits, considering 31st December is a due date for it. So that is a welcome and much warranted extension which was required in this regard, and which definitely came. And fortunately, this 31st December extension came in time, well in time. The another important amendment which has come up is section 50. The effect has been given to that amendment which was carried out to section 50. Basically, there was a lot of controversy as to if there is an output tax liability of 100 rupees, and if you are having a input tax credit of rupees 40, and if you made the payment of rupees 60, and if there is a delay in making the payment of tax or making the filing of a return, then whether the interest should be paid on 60 or the entire 100. So the department came up with their own logic, stating that it should be made on the entire 100, and then lot of litigation rounds happen, and ultimately GST Council looked into the matter, and it was decided that it would be only on the net amount. It was also decided that this particular notification or whatever change they are going to make will happen from a retrospective effect. Unfortunately, when the notification amending section 50 came, that notification gave effect very prospectively. Again, certain queries, rounds of I would say displeasure was shown on the social media, and then immediately some clarification came stating that key effect in a way would be given from a retrospective nature, and some court decision also came thereafter. So this section 50 is again, according to me, a very important amendment which has happened in the recent past. With these two important amendments, let me tell you what are the basic things that I'm going to deal in this session, with whatever time we are having. Certain changes are made in the return and payment for small taxpayers. So if you look at the manner in which the government has defined the small taxpayers, we have got the taxpayers whose aggregate turnover does not exceed 1.5. We have got taxpayers whose aggregate turnover exceeds 1.5 crore but does not exceed 5 crore. So everybody who has below 5 crore aggregate turnover are defined as are considered as a small taxpayers, and those who are having aggregate turnover more than 5 crore are normal taxpayers. So while as regards the normal taxpayer, that is taxpayers having more than 5 crore, not much change has happened. But as regards the small taxpayer, certain relaxations, certain new schemes have been brought into effect, and these schemes are going to be effective from 1st of Jan 2021. So a lot of changes have happened in the law, in the rules in this regard. So as regards the return filing options and the payment of tax options available to these small taxpayers, what are the changes that we are going to cover in this particular session. Secondly, a new concept of GSTR 2B has been introduced. So from August 2020 onwards, this GSTR 2B tab, if I recollect properly, let me tell you, I am not much of a compliance guy. I am heavily dependent upon my team in carrying out these compliances. Even in fact, when I was preparing for this session, I have taken a lot of inputs from my team, and I am thankful to them. So from August, from whatever I understood from my team, from August 2020 onwards, this GSTR 2B tab was visible. And what is that GSTR 2B and how it is different from GSTR 2A? That is something that we are going to see in this particular session. And then when we are talking about GSTR 2A, obviously the impact of GSTR 2A is more to be seen in the light of provisions of Rule 36(4), which restricts or which puts certain limitations on the amount of ITC that you can claim in your GSTR 3B. So we all know that when it comes to availment of an ITC, we have to avail that particular credit in our GSTR 3B. Whereas the eligibility or how much credit we are entitled to, that is dependent upon section 16, and as well as certain provisional credit related restrictions are imposed. So section 36(4), rule 36(4) is one such rule that one needs to see. Thirdly, a concept of e-invoice was introduced for companies, taxpayers having turnover more than 5 crore, more than 500 crores. There was also a concept of QR code which was to be implemented simultaneously, but thankfully it got deferred till 1st of Jan, and I think recently now it has been deferred to 1st of April as far as the penalties are concerned. So e-invoice, concept of e-invoice, what is the status, that is something that we are going to see. So ultimate entire purpose of this particular lecture meeting is just to make you abreast of what developments have happened in the last few months. So this concept of e-invoice is something that we need to see, we are going to see. And then from 1st of January onwards, that particular e-invoice would also become applicable to the entities having aggregate turnover of more than 100 crore. And then certain other things happened. For example, in e-way bill generation, if the person has not filed GSTR 1 for a 2 consecutive period, then the e-way bill generation was not possible. So department started blocking the e-way bill facilities. So that created a lot of problem. That provision was already there, but this happened. This was basically affected, or I would say everybody start getting the notices or the emails stating that the government is now going to act upon this particular provision soon. So from 1st of October or 1st of November, I believe the department started acting on these kinds of provisions. So that is something which happened in the last few months. And last but not the least, suddenly the departmental audit wing became very effective, and I'm sure most of you have already gone through the list which was getting circulated in the public media about number of SSEs who have been selected for an audit, GST audits. So again, in the time to come, we have to be very prepared about how these audits are going to be conducted and what we should do. So these are some of the highlights, I would say, that has happened in the past few months, which I'm going to cover. I have not been able to prepare a very in-depth presentation for this particular session, but I would like to keep one. I have just tried to put my thoughts on MS Word, which I think I'll just display over here. And as and how I start dwelling up one-on-one topics, I think some of the provisions which are there on the screen probably will help you to get in touch with what I am saying. So, starting with, I hope my screen is visible. So, starting with the return filing process for small assets up to 5 crore. So let me tell you, we all know that we have got two returns right now in effect. One is GSTR 3B return and another is GSTR 1. So GSTR 1 is basically a statement of a outward supply that we are furnishing. Now this GSTR 1, as far as the large taxpayers are concerned, that is having more than 5 crore, it's basically 11th. What I understand is that the due date for the purpose of filing this particular return is 11th of the next month, and all these returns are required to be filed on a monthly basis, month-on-month basis. Only to some small taxpayers, even today, the quarterly system of filing the return is available, and they have to opt for this quarterly system of filing the return. And when they are opting for this quarterly system of filing the GSTR 1, so again, outward supply GSTR 1 has nothing to do with your payment. It's a GSTR 3B for which the payment is required. Outward supply GSTR 1 is a normal. It's like a furnishing of an outward statement. So right now, bigger entities were filing it on 11th of the next month. Some smaller entities who had opted for monthly return filing, they were also filing it for 11th of the next month. And some entities which have opted for a quarterly filing, they were basically filing this particular return on, I think, 13th of the next month. So that due date was made from 11th earlier to 13th of the next month. Now, as far as the return, so this outward supply is something which we say that they are the returns filed or the statement filed under section 37 of the CGST Act. GSTR 3B is something which is filed under section 39 of the GST Act, and that is basically considered as a return, if you really ask me. GSTR 3B is considered as a return under section 39, and section 39 deals with two aspects. One is the furnishing of the returns, that is GSTR 3B, and another, it is dealing with the payment of taxes. And incidentally or coincidentally or as a matter of statute, the due date for the purpose of filing of GSTR 3B and due date for the purpose of making the payment of tax are aligned to each other. So whatever is the due date for the purpose of making the payment, the same is the due date for the purpose of filing of the return. So that is how the present law is been structured. From 1st of January 2021, as regards the return filing, certain changes are there, and as regards the payment, certain changes are there. So we are now talking about section 39 returns and the payments that are supposed to be made along with section 39 returns. So these specific categories of people have been notified because a proviso was inserted in section 39 where the return filing procedure or return filing mandate has been given, and that proviso said on for certain specified classes of persons the government may by notification say that it can be filed on a quarterly basis. So we are talking now about GSTR 3B quarterly filing. So earlier GSTR 3B quarterly filing was not existent. GSTR 1 quarterly filing was existent. But now we are talking about GSTR 3B quarterly filing for certain classes of persons who have been notified by the government. So these persons who are allowed to file a quarterly GSTR 3B are notified in notification number 84 by 2020. So who are the persons who have been notified by 84 by 2020? A persons having aggregate turnover up to 5 crore rupees in the preceding financial year. So as I told you, small taxpayers. So in the preceding financial year, if your turnover has not exceeded 5 crore rupees, aggregate turnover has not exceeded 5 crore rupees, then you are entitled for this quarterly filing of GSTR 3B. Now please, I am repeating, quarterly filing of GSTR 3B and quarterly making the payment or making of the payment of tax are two separate things. What right now we are talking about is only the return filing process, and notification 84 is dealing with only the return persons who are allowed to file return on a quarterly basis. 84 is not talking about, or this particular notification is not talking about anything about the payment. Okay, so 39.1 is only talking about return filing and not about payment. So those people whose turnover is up to 5 rupees, they have been given an option that you can exercise an option and you can select that you want to file GST returns on a quarterly basis, in a quarterly manner. So this quarterly return will be provided from January 2021 onwards. So this scheme is not applicable up to December 2020 returns, 2020 returns. So for December 2020 returns, the old regime is going to continue. That means they will have to make the payment and they will have to file 3B on a monthly basis. But from January 2021 onwards, they are allowed to go through this particular scheme. So what department has done or what government has done, because nowadays all these notifications which are making a change are basically devised or basically drafted in a manner that they first see what GST portal has done, whether the GST portal is in a position to implement it or not. So what has been done is that all those people who have already filed October return, so return for the month of October, if it is already been filed till 30th of November, then these options are automatically given or assigned to that particular taxpayer in the system. So if you have filed a return up to October, if you have filed a return for the month of October till 30th of November, then the system has already given you certain periodicity for the purpose of filing the return. So that system, so basically it's basically, you can say that the system is basically given you that particular default option if you have already filed return for the month of October before 30th of November. If you have not filed return for the month of 30th of November, then the system has not given you any default option and you have to then select what is an option under which you want to go. Now this default option which the system has given, that also you are entitled to change. So you have to make a decision, because right now that decision is going to be implemented with effect from 1st of January return. So you have got a time. So those who have already filed returns up to 30th November, system has already given a default, so you have to change that particular option. Otherwise, that deeming provision which has been given by the system will continue. So it will be continued as if you have accepted those particular things. If the return is not filed, then obviously you have to go and you have to select. If you select an option, then accordingly the returns will be processed. And this is only applicable to those who are less than 5 crore. For more than 5 crore, there is no change. So how the system has basically given a default option, that is also given in that particular 84 notification. They have said if in the old regime, in the current regime which is going on, for taxpayers having aggregate turnover up to 1.5 crore, option was given to file GSTR 1 either on a monthly basis or on a quarterly basis. So if at that point in time you were filing the return on a monthly basis, then default option is set as if even going forward you want to file the return on a monthly basis. So this is for turnover up to 1.5 crore. So those SSCs having turnover up to 1.5 crore, if they were currently filing the return on a monthly basis, GSTR 1, we are talking about periodicity of GSTR 3B, but default option which system has given is in respect of GSTR 3B. So if you are filing earlier GSTR 1 on a monthly basis, then even going forward the system has given a default option that you will continue to file GSTR 3B on monthly basis. If GSTR 1 you were filing earlier on a quarterly basis for those having turnover up to 1.5 crore, then the GS system has said that going forward even GSTR 3B you want to go for a quarterly basis. And if for those SSCs having turnover more than 5 crore who have furnished GSTR 1 on a quarterly basis, the system has said that so from more than 1.5 crore up to 5 crore, system has said that you will file the return on a quarterly basis. That is how the system has made the change. So if you don't want to apply for this scheme, then you have to change that default option. So within what time you can change this default option? So that also notification says that from 5th of December to 31st of January. So what is the logic behind this 31st of January? Is that your quarter generally starts from January, February, March. So quarter is defined under the law. So it is January, February, March that particular quarter starts. So what the law says is that this is only a transitional thing where I am saying you can start from 5th of December till 31st of Jan. But after 31st of Jan, you cannot make a decision. You cannot make that option or you cannot select the option. After 31st of Jan, if you do not make any option, then the old system will continue. So those people who are filing monthly return will file monthly return. Those people who are filing quarterly return as per the earlier scheme will file the quarterly return, and those people who are eligible for quarterly return but have not availed the option will continue to go by the monthly return. So that option needs to be exercised before the first month of the quarter. So January being the first month of the quarter, before the end of the first month of the quarter, you have to exercise that option. So those people who have not filed return for the month of October, for them also, right now 31st January is the day within which they have to exercise this particular option. Now suppose this transitional period is over, January, February, March quarter is over, somebody came in the next quarter, April, May and June 2021. Suppose he want to exercise an option for a quarterly return in April, May and June, then what he will do when he is supposed to exercise an option? The law says that in such cases, you will be given a time from the end of the second month. So let us take a case that April to June, this was a quarter. You want to know today whether you want to go for exercise a decision whether to file a quarterly return for this particular period or not. What is the time period available to you for exercising that option? The time period will be 1st February 2020. That means after the end of the first month of the preceding quarter. So the preceding quarter was January to March. So you leave the January. So from 1st February till 30th of April, so first month of the next quarter or the current quarter. So current quarter is April, May, June. The first month is April. So February to April, this is a period within which you can decide, you can exercise an option as to whether you want to go for a quarterly return system for the next quarter, that is April, May, June. Once you accept this particular option, once you say that I want to go for a quarterly return for April, May, June, you cannot change that option for that particular quarter. So that means once you decide that you have to go for April, May, June as a quarterly return, you have to follow compulsorily April, May, June as a quarterly return. Then when the next question is, when you are allowed to change this particular option. So first we saw within what time you are supposed to change that option. Now we are saying within what time you are allowed to change this particular option. You can change this option again in the subsequent period. So for April, May, June, you have already exercised an option to file a quarterly return. Now from 1st of May till 31st of July, the period is available to you. From 1st of May till 31st of July, the period is available to you. So if you don't want to exercise an option of quarterly return for the next month, for the next quarter, then you have to exercise this option between 1st of May till 31st of July. That is the option available to, that is the window available to you. But there is one more condition. It is not just this option, but there is one more condition. What is that one more condition? Is that unless and until you have filed the quarterly return for the earlier period of April to June, you will not be allowed to change the option. So if you want to change the option on your own, then there are two conditions you need to follow. First condition is you will have to file the quarterly return for the April to June. So unless and until you file the quarterly return for April to June, system will not allow you to change that particular system for the next. And another condition is that whatever is that period option you need to exercise, you need to exercise that option within that particular period only. That means after 31st of July you can't exercise that option. So if there is delay in filing the first quarter return beyond 31st of July, then you would not be entitled to choose this particular option for the next quarter. Then you will have to go to the next quarter, again the third quarter, and accordingly things will go on. So therefore, very important aspect, if suo motu you want to change this option, these two conditions needs to be fulfilled. That first you need to make sure that you are filing the earlier quarter's return. I am again repeating, this is a 3B that we are talking about. We are not talking about GST 1. So earlier quarter 3B you need to file completely, and for the next quarter you will have to exercise an option before the end of the first month of the next quarter. Before that you need to exercise this particular option. Now this is when you want to change this particular scheme on your own, in spite of the fact that you are below 5 crore rupees. What is the other way in which you will be automatically out of this particular scheme? By operation of the law. So suppose in a particular year, because this scheme is applicable only to those whose turnover in the preceding financial year is 5 crore rupees, is up to 5 crore rupees. So suppose your turnover in the current financial year increases 5 crore rupees, then also you are out from this particular scheme. And in that case, the last quarter, so if your turnover exceeds, say in the month of in the December quarter more than 5 crore rupees, then from January onwards you will go under the normal scheme. So December quarter would be the last return under this particular scheme. Thereafter you will go under the normal scheme. So there are two ways in which you can go out of this particular scheme. One is by operation of the law, which I just mentioned, and another is by you exercising your own option. Now you will ask me, what is the benefit for me to go into this particular scheme? Because unless and until there is a benefit given to me, I will not want to go under this particular scheme. The only benefit which I can see is that somewhere in making the payment also you are given some relaxation. So now, while we have already discussed the GSTR 3B return under section 39 for which this scheme is available, we will also now discuss what are the relaxation given under the payments to the small taxpayers. Now initially when the proposal was mooted, somewhere I believe I have read that for very small taxpayers up to 1.5, even the payment will be done on a quarterly basis. They will be given an option to do the payment on a quarterly basis. So somewhere I believe in the new return scheme, the scheme was that for more than 5 crore no change, for up to 5 crore but exceeding 1.5 crore quarterly return, monthly payment, and for less than 1.5 crore monthly quarterly return and quarterly payment. That was there, I believe, somewhere earlier in the design which was there in the mind of the policy makers. But now that is not something which has happened in the new returns. They have not made any distinction between that 1.5 to 5 crore. So everybody below 5 crore, so far as payment of tax is concerned, are in the same category. So those people who are below 5 crore but have not opted for a quarterly return, for them monthly payment needs to be made in accordance with the provisions of the law. So if your due date, if your tax due on a particular month is 100 rupees, every month you have to pay 100 rupees before 20th, and accordingly the matter will be over. So that date is basically 22nd and 24th. So 22nd for certain states, 24th for certain states in case of small taxpayer who are below 5 crore. So if you are going for a monthly, then you have to follow these particular dates. Now, if you are following the quarterly system, then government has given you some relaxation in the payment also. So now what is that relaxation? Before coming to the relaxation, let me tell you that every time when we make a payment, we do not make the payment directly into electronic liability ledger. We have got three ledger, you all know. We have got electronic cash ledger, credit ledger and liability ledger. So first, when we make the payment, when we avail the credit in GST or 3B, that credit gets reflected in the credit of my GST in my electronic credit ledger. When I make the payment through Chalan, at that point of time, that particular payment gets reflected in the credit of my electronic cash ledger. Whenever I file my GST or 3B showing liability, that liability is basically reflected in my electronic liability ledger. And whenever I discharge that particular liability, the words which are discharging of the liability, at that point of time, my electronic cash ledger is debited, my electronic credit ledger is debited, and that particular amount comes into my electronic liability ledger showing the payment or discharge of liability. So somewhere there is also a dispute. If you ask me, section 50 already set right a dispute that the interest needs to be paid only on the net amount, that is amount remaining after the credit. But there is also one more dispute which is, I'm sure, will come in few months or in few years, is that suppose I have already made the payment in the electronic cash ledger, but I filed a return belatedly, then in the interim period am I required to pay interest because I have already made the payment in the electronic cash ledger? That dispute, according to me, has not been put to an end. The department interpretation is that even if you have made the payment in the electronic cash ledger, till the time you use it for the purpose of setting of the electronic liability in the electronic liability ledger, we will not consider it as a payment and the interest matter will go on. SSA on the other hand is saying that once we make the payment, unless and until we get the refund at that particular payment, it remains in the electronic cash ledger, and therefore it is the payment made to the government through a valid challan, and therefore on that particular payment the interest liability cannot be made. Now somewhere government presuming that merely making a payment or depositing a payment in the electronic cash ledger is not sufficient in order to eliminate your interest liability, has come out with this kind of a scheme. So the underlying assumption of the government in coming out with this particular scheme is that merely depositing the money in the electronic cash ledger is not sufficient. So only for small taxpayers who have opted for a quarterly return, we are giving them a benefit by saying that even if you deposit certain money in the electronic cash ledger, that is sufficient, no interest will be charged. But for others, the interest will be chargeable. So it is with this assumption that particular benefit has been communicated to the public in this particular payment scheme, monthly payment scheme. So what is that payment scheme? What is the benefit which is given? What the government says is that when you are filing a quarterly 3B, it is not as if you have to, because quarterly 3B, the due dates are basically, I believe, 13th of the next quarter. Or sorry, quarterly 3B, the due dates are basically, I think, 24th or 23rd of the next quarter, the 22nd or 24th of the next quarter. So when you are filing that particular 3B in a quarterly, it does not mean that payment needs to be done on a quarterly. Payment will have to be still made on a monthly, but we will not ask you to make the exact payment. Even if you don't make the exact payment for that particular quarter, we will still say that the payment has been made correctly, so long as the payment is made as under. Whatever, so how much payment you are supposed to put in your electronic cash ledger, for that the government has given you one formula. The government has said that you already know, allow me a moment, I think there is some problem with my laptop charger. Yeah, sorry. So government has said that so the government has said that whenever you make a payment in the electronic cash ledger or when you set off your liability in the earlier period, you know what was your liability in the past quarter. So suppose you are filing you are going to decide a payment for the month of, in the second quarter, say July, August, September. So you are going to decide how much payment is to be made for July, August and September. You already know what liability was there in the earlier quarter, that is in the month of April, May, June, because you have already done it. So for April, May and June, whatever was the liability, suppose your liability was 100 rupees, but out of that 100 rupees, suppose you have discharged only 70 rupees in cash and 30 rupees by credit, then you can only pay 35% of that 70 rupees in a particular month. That is what the payment that you need to make in the first quarter. Every quarter you will have to make whatever liability you have discharged by debiting your electronic cash ledger. So out of 100 rupees total liability, 70 rupees liability you have deposited earlier by electronic cash ledger. Out of that, 35% you deposit in first month, 35% remaining you deposit in the second month. That is how you need to deposit that particular amount in the electronic cash ledger by using your normal PMT challan. Once you pay that particular amount, then it will be deemed as if you have made the liability, and then finally when your quarterly returns are getting filed, whatever is the balance that you pay, whatever is the liability which is there after offsetting the ITC that you pay, if you have paid excess liability after filing the return, you can go for a refund. If there is a short liability, you can make the further payment and make the whatever shortfall good. But for the first 2 months, you can make the payment on ad hoc basis like this. So 35% of the earlier month. If you are filing the quarterly return in the earlier month, then 35%. If you are filing the monthly return in the earlier month, then you have to do it on a monthly basis. This was only transitional. Going forward, it will be applicable only for the quarterly one. So quarterly, whatever was your liability, 35% of that you need to consider. Now, what is important in this is that you will say that everybody will start depositing the money, but what if I don't file the return, quarterly return, then am I entitled to this benefit in the next quarter also? Answer is no. In order to avail this particular benefit for the next quarter also, you need to first make sure that you are filing your quarterly returns in time. If you don't file your quarterly returns in time, then according to me, you may not be entitled to this particular facility in the subsequent month. So the facility of this ad hoc payment is applicable only to those small taxpayers who are filing the return regularly and in time. If they are not filing the return regularly and time, then this particular facility is not available to them. Now what would happen? Suppose you will say I have got a nil return. Do I have to still make this particular 35% liability? Answer is no. If you have got a nil return in a particular month of a quarter, so in the first month and in the second month you are saying that there is a nil return, you don't have to make the payment. Or alternatively, if you believe that the amount which is already there in your cash ledger and your credit ledger is sufficient enough to take care of your entire liability for that particular month, then also you need not deposit anything. So basically, under the scheme, what the government is trying to say is that if there is a sufficient balance, both electronic cash ledger as well as credit ledger taken together, that would cover your liability for that particular month. You don't have to deposit anything. You can merely file your quarterly return and make the adjustment in a quarterly manner. So no outflow or no payment on a monthly basis will come up. If the liability is not sufficient, then don't bother calculating anything. If the liability is not sufficient, see what liability you had discharged in the earlier quarter. What out of that, how much you have actually paid using the cash by utilizing your cash ledger, and 35% of that you pay in the first quarter, 35% of that you pay in the second month, and the balance liability you finalize at the time of the quarter. So that is how this particular scheme has been designed for the purpose of payment, and it is applicable only to those who are making this particular payments in a regular manner. Okay. So now let me tell you, I told you to make that 35% payment, but the question is when that 35% payment needs to be made. Like for everything we have got a due date. Normally we pay on 20th of the next month. In some cases we pay on 22nd of the next month. In some cases we pay on 24th of the next month, depending upon 3. So earlier we were making the payment on 20th or 22nd or 24th. When this payment needs to be made. this payment needs to be made on or before 25th of the next month. So they have given you only one more day. The only benefit here is that you don't have to elaborately calculate anything. Even if you make the payment by challan, you don't have to set off it, still it will be considered as a valid payment, and it is sort of a relaxation. So now whether it will result into a ease of business or whether you have to every time track as to what you have done is correct or not, that is an individual decision to make. Okay, because sometimes when it is a process, you will have to, and again, this is applicable only if you are a small taxpayer and you have opted for a quarterly return. When you have got an option to opt for a quarterly return. If you have not opted for a quarterly return, or if you are not a small taxpayer, then it is not applicable to you. So therefore, once you are out of the main section 84, main notification 84, you are also automatically out of this particular scheme. And the exit would be the same in the section 84 return filing also, and as well. So once the monthly return are applicable to you, even the payment would be applicable to you on a monthly basis as in a regular manner. So that is what is basically this section 85 talks about. 35%. This is a special procedure applicable only to the small taxpayers. Again, as I have told you, the basis of this particular special procedure, the benefit of this particular procedure is on the presumption that if you make the payment in the electronic cash ledger but did not set it off against the liability, then interest will be applicable. But there are cases where a different case can be argued, stating that in that case also no interest is applicable. So that is so far as this section 39 return filing and section 39 payment for small taxpayer that has been dealt with in the past. So 84 notification number and 85 notification number, these are the two important notifications which are important in this case. And so far as the rule is concerned, there is rule 61A which has been incorporated in connection with those people who want to opt for a quarterly filing of the return. And as regards the due date for the purpose of making the payment of this ad hoc, that the payment is 25th, that is given in the new rule, that is rule 61. Now, once GSTR 3B is over, let me take you to GSTR 1. In GSTR 1 also, for the short taxpayer, certain changes have been made. Now we all know that in GSTR 1, suppose I go for a quarterly return, then in that case, my GSTR 1 outward supply will be filed in a quarterly manner. So if my due date for the purpose of filing of GSTR 1 is 13th of the next month ending the quarter, so April, May, June, my due date is say 13th of July, then before 13th of July 2021, my receiver of the service will not get a credit. Okay, that credit will be reflected in his statement thereafter. So in order to make sure that, because what is happening, this outward supply change has got a lot of things to do with the restrictions that the government has imposed in availment of the credit. So government has said that unless and until something is appearing in your GSTR 2A, earlier 2A, now 2B has also come, so we will come to 2B at that point of time. I will again repeat this. But unless and until something is reflected in your 2A, or the maximum credit that you can take is dependent upon how much amount is reflected in your 2A. So if 100 rupees are reflected in your 2A in a particular month, maximum 110% of that particular amount you can take a credit. Remaining you can't take a credit. Remaining amount you can't take a credit in as a provisional credit in your GST return in your 3B. That is what the limitation. So the people started arguing that look, for quarterly those people who are filing quarterly, it is not in our hands that it is not already reflected. So why we should unnecessarily bear the burden of it? So you should provide some facility, because otherwise this particular scheme would be challenged, this particular provision. Incidentally, when we will come to this particular rule, I will mention it. But otherwise people will start challenging that this rule is not workable, it is unjust, and the government has not put up a proper mechanism for us to really use this particular rule in a proper manner. So in order to bridge that argument, that the rule is, first of all, we have given a proper mechanism, and number two is that the rule is based on some logical, so it is not as if we are asking you to do something impossible. We have given you all the facilities to comply with it and to see to it that your loss is minimum or your provisional credit restrictions are minimum. That is the way. It is with this intention this new changes have been made in the people who are going to file a quarterly return and the introduction of 2B. So both go hand in hand when it comes to the mismatch, ITC mismatch, or I would say 36(4) related provision. So what is the change which has happened in the quarterly filing? So as I have told you, government wants that particular credit which the quarterly people are going to give by filing the outward supply return, that should come on a month-on-month basis. So therefore they said that although GSTR 1 is to be filed on a quarterly basis, we will provide you a facility to file certain invoices on a monthly basis. So on one side you are saying GSTR 1 to be quarterly, on other side you are saying we will also give you the facility to pull certain invoices on a month-on-month basis. So anybody who is opting for a quarterly GSTR 1, anybody who is opting for a quarterly GSTR 1 or to whom the quarterly GSTR 1 is applicable, somewhere or the other he will have to file a monthly statement in the form of this invoice furnishing facility. And what is that? Which kind of invoices can go into that invoice furnishing facility? Only B2B invoices. And there is a restriction because government say that not everything you can put it. Only major things you can put. So up to 50 lakh invoice value aggregate per month, you can push the data in this invoice furnishing facility. So I will give an example. So suppose April, May and June 2021, this is a quarter. I am a person who has opted for quarterly filing of GSTR 1. Then for the month of April and May, instead of filing GSTR 1, I will file monthly invoice furnishing facility. That I will file. That statement I will file in IFF. I will include only those B2B invoices which are major, so that those people who are dependent upon me for the purpose of getting the credit will get the credit reflected in their GSTR 2B immediately. So it will be for first month and second month this facility is available. Third month obviously it is not available. So for April, May and June, if you want to file an invoice furnishing facility, if you want to upload the returns to invoice furnishing facility, you have to upload it before 13th of the next month. So for this IFF, then I will have to file this IFF anytime. I can keep on continuously uploading that IFF between 1st of May 2021 till 13th of May 2021. So for April, I can furnish it from 1st of May till 13th of May. I can continuously furnish that IFF. But once I furnish that IFF, once I furnish that information in IFF for the month of April invoices, again that I don't have to put in my GSTR 1. So very clear, once you put something in IFF, don't put again that particular amount in GSTR 1, otherwise twice the credit will go in GSTR 2B. So something which is going in IFF will not require to be furnished in GSTR. Now again, this will have its own challenges, because in order to match GSTR 3B output supply with GSTR 1, now you have to combine both GSTR 1 also and IFF also. So again, some sort of a reconciliation challenge might come in this particular facility. So that one needs to see how we are tackling it. But then very clear, you furnish IFF. So this is not more for the people who have opted for a quarterly furnishing of the return. This facility is more for the people who want to avail the credit based on that. It is for them this particular IFF has been given. So somewhere my personal view is that this is both interlinked. Some mess has been created by, although the intentions are good, I believe that this is not really speaking, giving a good flavor to the people who are into the compliance. Now, what can go, again as I have told you, it only B2B invoices, debit notes, credit note can go. For B2C, IFF is not applicable. Once it is uploaded into an IFF, you don't have to upload it again in GSTR 1. So IFF due dates are only for the first and second month. In the third month, that is in the month of June 2021, there is no IFF due date. So that you need to remember, because this has got relevance when we will see what would come in my 2B. So this is a new change which has happened so far as outward supply is concerned. In the new scheme for quarterly returns, option is given for IFF. That IFF is applicable only to B2B invoices. Total invoice value should not exceed 50. So only selective invoice can be uploaded so as to make this particular item exceptional. And details can be uploaded between first day to 13th day. This functionality is yet to be made active because this is applicable from 1st of January, if I'm not wrong. Then the next is we are talking about furnishing of the monthly return. Certain notifications nowadays they were doing everything all due dates by notification. So initially also for the October to March period, this notification 76 by 2020 was introduced or was issued. But subsequently in November, they got this entire due dates into the law itself, into the rule itself, and therefore they removed that particular or deleted that particular notification. So as far as the furnishing of the GST returns are concerned, the new rule 61, which is specifying the returns period for the month of October 2020 to March 2020, general rule is 28th of the next month. For certain categories having turnover less than 5 crore, 22 of the next month, and for certain states it's 24th of the next. So that is how it is. As regards quarterly filing from 1st of January 21 onwards, I have told you the dates are exactly the same. Its only thing is that instead of next month, it has become next quarter. So for these two, instead of 22nd of the month, it has become 22nd of the month succeeding the quarter. These are the payments that we are or the GSTR 3B filing dates we are talking about here. Then now we will come to GSTR 2B. So we just saw how GSTR 1 special procedure for payment and for how GSTR 3B 39 return special procedure for payment and return filing is there. What change they have introduced in GSTR 1 for quarterly by giving another return in the form of or return or statement in the form of this invoice furnishing facility IFF. Now we come to 2B. Now what is 2B and what is 2A? Again, this is something new which has come up. I am sure most of you are already aware, but just to brush up. We all know that 2A, whenever a supplier shows something in his GSTR 1 or in his GSTR 6 or his GSTR 5, different output returns for different categories of persons, that amount is basically reflected in my GSTR 2A. 2A is basically a memorandum account. If you ask me, 2A is nothing but something which enables you to know whether your invoice is properly reflected in the supplier's return or not. Beyond that, according to me, it has got no statutory significance. It only gives you a indication that somebody has shown. The biggest failure of the 2A was that 2A was always dynamic. So anybody changing it, 2A figures are changing. So you don't know at what point in time which figures you need to take because it always changes, and that is the precise concept of provisional versus final. 2A was talking about provisional. Something we are talking about is a final. 2A versus 2A and 2B, these are the two important aspects that now we need to consider in the light of this Rule 36.4. So earlier in Rule 36.4, when the government said that you have to restrict your credit to 110% of whatever is showing in 2A, it may be possible that in one particular month your 2A is showing 100 rupees for that month. In another month, for the same month when you download the report, it is not showing 100 rupees, it is showing 120. So the law was making very impossible to implement when 2A was dynamic. So 36.4 was not really speaking implementable till this particular 2B amendment came. When 2B amendment came, the government not only told you that the 2B figures are going to remain static, they are not going to change. They also told you that in 2B, which figures are going to be reflected. So I also know publicly. So it was always our grievance to the IT, to the GST, and that whatever, how, now GSTR 9 is to be prepared. What figures are going to come in GSTR and how they are going to come, issue some public document. Here in 2B, it is given specifically in the law itself as to what items are contained in 2B, when the 2B would be made available to you. So that is very significant, and that I believe is a step towards making that restrictions on the provisional credit a success. because earlier 2A was dynamic, now 2B has become a very important correct measure for seeing whether the particular person is complying with the provision or not. So what is this 2B? So I have just given two examples. I have given April 21 and May 21. April 21 because it is the first May of the quarter. So as far as the monthly return filing is concerned, there is no problem because everybody is filing GSTR1 on a monthly basis. It is getting reflected correctly. But as far as the quarterly return filing, there might be some time gap, and therefore, in order to establish what would come in monthly return or quarterly return, I have given you two examples. The first example is April 21. So first you concentrate only on these two or three lines, two columns. We all know GST for April 21, my supplier must, if he is filing GSTR1 on a monthly basis, for April 21 period he will file the return on 11th of May 21 if he is a large taxpayer. If he is a quarterly taxpayer, then for the month of April 21, his due date will be 13th May 2021. So for the month of April 21, he will file the return on 13th May 2021. And if he is a quarterly, suppose he does not go for that IFF option, then he will file the return on a quarterly basis. That is, he will file it on 13th of July 2021. We just saw the due dates. So this is how my supplier will actually file his GSTR1 when we are talking about monthly filers, quarterly filers with IFF facility and quarterly filers without IFF facility. Now let us see, if I am talking about April 2021 and if I want to know that April 2021 when 2B would be made available to me. The 2B for the purpose of April 2021 would be made available to you certainly before the due date for the purpose of filing 3B of April 2021, because you will have to show that availment in your 3B. So April 2021 3B, for bigger taxpayer it is 28th, for smaller taxpayer it is either 22nd or 24th. So definitely this particular 2B for the month of April will be made available to you before 20th of May or before 22nd of May or before 24th of May. That particular thing will be definitely made available to you before that. But when ultimately government will close it, the government said, look at this particular column now, GSTR 2B. Now in GSTR 2B, when somebody is filing, anybody who is your supplier is filing a monthly return, any return which have been filed between the period 11th April 2021 to 11th May 2021. So your April due date, your period, the period available to you for the purpose of analyzing your 2B will start from 12th May. So what would basically comprise within that particular 2B for the month of April, which all items will come. So anybody who has filed your any GSTR1 during the period 11th April 2021 to 11th May 2021 will be generated or will be gathered in your GSTR 2B for the month of April 2021. Now, anybody who is filing an quarterly IFF during the period 11th April to 11th May, that particular item will come in your GSTR 3B, GSTR 2 will be combined in your GSTR 2B period. So anybody filing your IFF during this particular period will come over here. Anybody filing your GSTR1 quarterly returns during this particular period will be captured in GSTR 2B of that particular April. So if government has not told you which kind of things are going to come in your GSTR 2B for the month of April. So you come to know that whenever 2B is generated, these many people have filed the return during this particular period. And this is made available to you immediately after 11th of May. So for April, 12th of May, that particular 2B will be made available to you. And then you will be having a period from 12th of May till the remaining subsequent period to 20th or 22nd to make your calculations. So like that, this particular 2B will be made available. And why I am saying this 2B has become more relevant now is because of these provisions of matching contained in section rule 36.4. So having told you the functionality that they have changed in GSTR1 and the functionality that they have now changed in general 36.4, rule 36.4. Now rule 36.4 is a rule. It's a delegated law. It's a subservient law. It is not a provision under the act. So obviously it must have some source from the act under which they can make this particular rule. The government has already inserted section 43A recently by making an amendment to a CGST act, saying that the government can formulate rule to make whatever restrictions they want in a particular situations. This 43 is very exhaustive rule, exhaustive section giving a wide powers for the purpose of framing of the rule. But this section 43A to my knowledge is not yet notified. It's not yet notified. So having said that the section 43 is not notified, obviously rule 36.4 today is not having its power from section 43A. Then the next question comes under which category this particular power is being derived from. So this power is apparently being derived from section 41, which is dealing with the provisional credit. And now comes the dispute whether section rule 36.4 and section 41 are in sync with each other. Whether there is enough power given in section 41 in order to say that rule 36.4 in the manner in which it is drafted is within the powers given under section 41. And it is on this ground today certain petitions are pending before the court. Therefore, legality of the source section qua the rule is something which is going to be there so far as this particular implementation of rule 36.4 is concerned till section 43A becomes effective. In addition to that, till the time 2B was not there, the practical implementation of this particular provision was also in dispute. Till the time there were restrictions on suppliers not providing the facility to update the monthly GSTR1, there were certain limitations as regards implementation of this particular rule. What the government has now tried to do is that by incorporating 2B and the quarterly filing, making available the monthly filing facility for quarterly return, to some extent they have made this provision workable. But again, the main issue as to whether 41 and rule 36.4 go hand in hand, whether they go in along with each other or not, that is still in dispute. So this is so far as rule 36.4 issues and this new functionality that they have brought in. Going forward, let me take you quickly to this e-invoicing. Again, to recap what we saw, section 39, 3B return filing by small people, section 39, payment, new procedure by the small taxpayers. Then we looked into your GSTR1 new functionality. Then we looked into your GSTR through 2B new functionality, and then we looked at say rule 36.4. Now we are coming to the concept of e-invoice. Now this e-invoice, again, what is the concept of e-invoice? Let me quickly tell you. Today we are filing GSTR1. For filing GSTR1, we are getting the data from our own internal software. So we are having an invoice generation software which is more or less integrated with our accounting module. So what we are doing, from that particular module we are fetching the data. That data what we have fetched, that we are incorporating in GSTR1 format. So GSTR1 has a specific format. So we are incorporating that particular data in GSTR1, and then from that GSTR1 data is basically flowing into my GSTR1 return on the portal. I am preparing that JSON file and I am uploading that particular item on my GSTR1 and so on and so forth. So now what happens is that in this entire process, everybody is using their own ways. Somebody is using X software, somebody is using Y software, somebody is using Z software, and therefore as a result of this, there is no standardization. Some softwares are giving a field in X manner, some softwares are giving the field in a Y manner, some softwares are giving the field in the Z manner. So to the extent the data is being generated by these particular softwares for the purpose of GSTR1, Whatever fields are relevant in GSTR1 data may be standardized, but whatever fields are not relevant in GSTR1 data may not be standardized, and the softwares may not be standardized. So what the government said is that we will provide you one standardized unique schema to all softwares. You convert all your software into that particular schema, so that whenever the output will be generated, that output will be generated in the typical syntax only, where irrespective of what your software is. So today, whatever your softwares are, to what is this invoice? What is an action point? The action point is that whenever the software is generating an invoice, you need to see that the software has got that particular schema in place. Uploading is not a problem. So in case of invoice, most of the people are under the impression that we will require a software to upload the invoice. Let me tell you one step back. Before uploading the invoice on the portal, you need to have that invoice in a particular format. So for e-invoice, what is essential is that you need to have a software that will give you an invoice in that particular software. So unless and until your present invoice generation software is not compatible to generate that particular information in the format in which the government has provided a schema, you won't be able to upload that particular invoice on the return. And this is where difference that businessmen today is heavily dependent upon the software companies. If you have to incur the cost, what would happen? All companies having 500 crore. When they will issue the invoice, they will generate the invoice to be in the standardized format only. All the information will be in the standardized formats only. That is how the things will happen. Now earlier, this e-invoicing was going on, invoicing concept was going on. The department's view was very clear. They said that why we want e-invoice? We want e-invoice because we want that particular data to be captured directly from the invoice to GSTR1. Now what is happening, from invoice, that particular data is getting converted into GSTR1 files, and from GSTR1 files you are uploading it. So there may be some manual intervention there. So we don't want that. Let the invoice level itself data get flow into GSTR1 also, your e-way bill also, and all other places. And that's why they are mandating this e-invoice. So initially, somewhere in the December last year, they came out with the softwares or the websites where you can upload your e-invoicing and you can generate an IRN. So let me tell you, this GST portal and invoice registration portal are two different portals. Whatever you are uploading on for the purpose of e-invoice are on invoice registration portal, and whatever you are uploading for the purpose of return is on GST return portal. So both are different portals. In order to get the information from an invoice return portal to GST portal, it has to be basically fetched from invoice return portal to GST portal. That functionality GST would make it available, but both are separate, and the data will not be stored in your invoice return portal. It will be deleted after a periodic interval. So this invoice return portal, initially the department had thought of implementing it from 1st of April 2020. Therefore, they gave the schema, all this invoice registration portal from December 2020, December 19 onwards. But things did not work out. Then they started, then the tech company started testing this in the testing environment, and then this schema was revised in July. So revised schema was made available from in July 2020. In the meanwhile, because of lockdown and various other reasons also, this implementation was deferred from 1st of April to 10th of October to 1st of October. Now, to whom this e-invoices is not applicable, that is very much important. So initially from 1st of October, when this e-invoicing started, it was made applicable only to those companies having a turnover of more than 500 crore in the preceding financial year. So then they said that preceding financial year means from 1st of July 2017 onwards, you have to consider 17-18 year also for the purpose. So if in any of the year 17-18, 18-19 or 19-20, if your turnover is exceeding 500 crore for all aggregate turnover, which will include your stock transfers also, not just financial turnover but stock transfer also, then the e-invoicing would be applicable to you. It was not made applicable to insurer company, banking company, financial institutions. So they are out. Goods transport agents are out. Passenger transportation services are out. certain tickets, cinematography films who are issuing the tickets are out. So these people are already outside the purview of e-invoice, whether or not their turnover is exceeding 500 crore or not. Subsequently, the amendments were made. They said that this particular turnover, now e-invoicing would also be made applicable for companies having turnover more than 100 crore from 1st of January. Before that, they made it very clear that e-invoices is not applicable for, it is applicable only for B2B invoices. So any B2B invoice which needs to be shown on an invoice wise level in GSTR 1. That is the concept, because it need to ultimately go in your GSTR 1. So anything which needs to go into the invoice level in GSTR 1, this particular facility or this particular invoice is necessary. But B2C were taken out. Even B2C large were taken out from the purview of invoice. So invoice is only applicable to B2B. It is applicable for exports also. The reason why it was made applicable to exports is in order to have a better integration with the IGST module, or I would say the customs module. So that's why exports were also included over there. But apart from this insurer, banking company, even the SEZ unit was taken out from the purview of the e-invoice in the subsequent amendment. So if you ask me today, to whom the e-invoice is applicable, it is applicable only to companies having turnover more than 5 crore who are not these entities. But from 1st of January onwards, it would be made applicable to all entities other than the entities which are mentioned on the screen, whose turnover is exceeding 100 crore in any of the preceding financial year, 17, 18, 18, 19 or 19, 20. So you have to check all the three turnovers to make a decision whether e-invoice is applicable to you. And if e-invoice is not properly implemented, it would mean that your invoice is not correct. It is not a legally valid invoice. And there will be a challenge if you are especially in the business of goods, because for e-way bill you need to generate this e-invoice. If your e-way bill is not supported by the e-invoice, which is a valid invoice, then again you might face a challenge. Department will say that it is without authenticate invoice and there will be a problem. And that is why this e-invoicing is extremely important, especially those people who are dealing in goods. Very important. Now when it comes to e-invoice, from an action point, what is important is that you need to get first a person who can develop a sort of a software to generate your invoice in a schema which is provided by the law. Once that software generates the invoice in the schema which is provided by the law, then the subsequent part of JSON creation can be done without help of the software. So once the JSON is created by your system, it can be uploaded offline. May also you can upload it offline using your normal GST portal. Don't require any GST software for it. But nowadays many software companies are giving you both. They are allowing you to, they are providing you a converter also to convert your system into a GST schema format, and they are allowing you to push also. But what is important decision making is that this conversion into a standard invoice format, that it should give. If it does not give that, then you may face a problem, whatever be the software. So that is very important. Then once the e-invoice becomes applicable, initially in the month of October, for 500 crore company, even 500 crore company could not implement it. And therefore, one relaxation was provided on 1st of October, stating that for all the invoices which you have generated from 1st of October to 31st of October, even if you take an IRN before 31st of November, so 1st of October to 31st of October, if you take a IRN before 31st of October, then also that particular IRN would be deemed to be a valid. So you don't have to take it as and when the invoice gets generated. Some special procedure was given. But that relaxation is only applicable to 1st of October to 31st October invoice. It has not been extended further. For 100 crores, again, this kind of a relaxation has not yet come. It might come, we don't know. But incidentally, one more aspect that we need to see is QR code. While on B2B invoices, under Rule 46 of the CGST rules, this e-invoice became mandatory. For B2C invoices, for turnover, for companies having turnover more than 500 crore, the quick response code or the QR code became mandatory from 1st of October. It was then subsequently extended to 1st of December, and now from 1st of January, and now it has been further extended from 1st of April. So if you are not in a position to implement that QR code on B2C invoices for more than 500 crore between 1st of January to 31st of March, then no penalty would be levied on you as long as you are going to implement it from 1st of April. So that is how the new notification has now come in. Restriction on the e-way bill, I have already mentioned that if you have not filed your returns for a consecutive period of 2 months, then your e-way bill facility will be disabled. That means a person who is generating an e-way bill for you for sending the goods will not be able to put your GST number in that party. And if it is not in the position to generate e-way bill, that means he cannot give you the goods. So you will have to compulsory file the return, get your e-way bill unblocked, and then ask your person to get it. So I have seen a lot of tensions have gone up during this pandemic. Already businessmen were suffering because of low orders. On the other hand, although they were having the order, because the other party had not filed the returns, they were not able to generate a e-way bill, they were not able to consign or send the consignments. So if you really ask me, the timing is not really speaking a very great timing to introduce these kind of provisions as of now. It could have been postponed considering the special circumstances, but nonetheless it happened. This is so far as the general amendments which have happened. There are certain couple of amendments, couple of extension which has given for the past period. If you have not filed a return, and if you file it before up to September, if you file the return during a particular period, then your penalties were waived, or they were made. If they are nil return, then no penalty, or if it is a maximum penalty is up to rupees 500. So those kinds of beneficial provisions were there. Nil return filing penalty has been reduced to 10 rupees, subject to maximum 5,000 rupees. So that is another thing which has come up. Then for ITC 04, I think some problems people are still facing, so that timing has been extended for that. So like that, some HSN code notifications have come up. The mandatory HSN code quoting. So instead of 8 digit, now you can quote up to 6 digit. And in case of a service, now you can quote up to 4 digit even if your turnover is more than 5 crore, except for few specific items where the government has mandated 8 digit code. So that kind of notification has come up. Last but not least, I'll spend maybe 5 minutes on departmental audits, because that is also a new thing which is coming up. So departmental audit, again, I think section 62, if I'm not wrong, section 65, which is dealing with the audit by the departmental officers. Now let me tell you, right now the audits which are coming up are for the financial year 17-18, and most of you have already gone through this audit procedure. GST audit is already over. So therefore, you should be in a comfortable position, especially those entities where 17-18 audits have been done. In the law, the audits can be done for 17-18 only, or 17-18, 18-19 together, or it can be done for 17-18, part of the 17-18, part of the 18-19. So audit is not necessarily for a year. It can be for more than one financial year or even a part of the financial year. Section 65. Now, whenever audit comes, when the audit procedure starts, not when they are disclosing that we have selected some 7,000 SSCs for the purpose of audit and this is a list. That is not when the list is made publicly available does not mean that the audit procedure started in your case. To start the audit procedure, they will have to give you at least 15 days notice. That notice needs to be issued in some form, GST ADT 01. So on one hand, section 65 deals with audit as far as rules and procedures are concerned. Rule 101 of the CGST rule deals with it. So they will have to give you this 15 days notice to give you an enough preparation as to what kind of data is required to be compiled at your end. That notice needs to be given in GST ADT 1. After they give you this particular notice, they will have to complete this particular audit within a period of 3 months, and unless it is further extended by the commissioner on certain specific reasons, for reasons to be recorded in writing. And then before concluding the audit, after concluding the audit, they will have to give you the findings of the audit in what we called as an audit report in ADT 02, GST ADT 02. So in GST ADT 01, the show cause notice comes, not the show cause, the notice comes, notice of audit comes, and GST ADT 2, the findings are communicated to you. So unless you get the ADT 01 notice, your audit has not started. So where you will get it, please check in your logins, because that notice might be already there in your login. You check whether in the login that particular notice has been given or not, because sometimes this particular notice comes in login, sometimes the mail is given to you. Practically many a times that mail may not be in function today, that mail may be of somebody else, so you may not be aware that mail has been sent. So better to check. If your name is appearing in the list, then definitely you go and check if ADT 1 has been issued to you or not. If it has not been issued to you, then also if the name is not appearing, still you check whether the ADT 01 is issued to you or not, because in your login that particular notice will be shown, and accordingly the process will start. You have to be very careful while giving the data to the department. The GSTR 9C is extremely important for those who have completed GSTR audit for 17-18. The items which are there in other adjustments in GSTR 9C, the items which are appearing in reconciliation statements, the purchase register which is relied upon by the auditor for the purpose of giving a true and fair view, the outward supply register which is relied upon by the auditor for the purpose of giving true and fair view, all these will be requested and all these will be asked from you in the course of an audit. So all these preparation you have to do it in advance, that there is enough credit available to you, so that kind of aspect might come up. In certain cases you may have issued the credit notes, so those credit notes, whether they are correctly issued or not, that issue might come up during the audit. Obviously these all cases have already been dwelt upon by your auditors in the course of an audit, but then there are certain aspects where the auditor is required to do it on a test check basis, so he may not have done it in a very great detail, or he may have done it on a sample basis. Most importantly, your reconciliation which is given in GSTR 9C. So if in your GSTR 9C the reconciliation is not correctly given, then, or it is said that unexplained reconciliation, then please be ready, because government is definitely going to pick up that particular item, especially if the tax, or if the auditor has disclosed that the taxable turnover as per financial is more than taxable turnover that you have shown in the GST return. Then if the reasons are not properly given, there is a problem. So these are some of the items that you need to be prepared with when it comes to GSTR 9C vis-a-vis departmental audits that they are going to come up with. So with this, I believe, just to summarize, certain developments in the area of compliance pertaining to small taxpayers, dealing with filing of GSTR 3B, dealing with payment under GSTR 3B, quarterly filing of GSTR 1 with additional facility of IFF, GSTR 2B generation, the impact thereof on Rule 36(4), what is the legality of Rule 36(4), the interest, whether you have to pay for the period for which you have already deposited tax, also under litigation, the e-waybill restrictions if you have not filed the return in time, specific extensions as regards certain returns, the HSN codes related circulars or notifications, e-invoicing, its applicability to companies having more than 500 crore and now to companies having more than 100 crore in the preceding financial year from 1st of Jan. These are some of the items that we touched in this particular session. I request Dushyant, if there are any questions, we can take it up in the next few 10 minutes. Thank you all. Thank you very much.
Suhaji, you are on mute. Suhaji, you are on mute.
Sorry. So thank you, Mandar, for sharing your knowledge and with a lot of enthusiasm in your voice and helping the people to understand the compliances and the intricacies of the compliances. So I will request Dushyant to take certain questions. They are in Q&A box and there are one or two questions in chat box. And then Dushyant will make certain announcements and vote of thanks also. Yes, thank you.
Yeah, thank you, Suhaji. Thank you, Mandar, first of all. It was quite a good summary for all of us. Let me take a few questions which are relevant, I say. One was, what is the difference in monthly invoice furnishing and GSTR1? Though you have taken quite in detail, but you can just quickly answer so that one can answer.
See, what is the difference between monthly invoice furnishing and
GSTR1.
okay? So monthly invoice furnishing is just an additional utility, if you ask me, because GSTR1 is something. There is no difference. If you ask me, is there any difference? There is no difference. The difference is only the time period within which you are going to file monthly furnishing facility and the GSTR1. In case of a GSTR1, you will have to give B2B also, you will have to give B2C also. You will have to also give certain additional adjustments like advances and all. But in case of an invoice furnishing facility, there is no scope for making any B2C adjustments. You don't have to give any B2C. And the purpose of the invoice furnishing facility is to make sure that at least bigger clients, so some clients might come to you and say that मेरा दिखना चाहिए GSTR 2A में. My invoice should be, otherwise I will not process the payment to you. Lots of bigger entities are following this kind of a thing. So you can't wait till the next quarter to get your payment, because they will say I will release the payment only if you give me the credit into it. So in such scenario, to facilitate a smoother interaction between the recipient and the supplier of the service, this monthly furnishing facility is given to you. So if somebody of your client, you know that he is not going to pay unless and until the credit is reflected in 2A, you can take resort to this particular IFF. You can file that particular IFF, and the best part of IFF is that IFF can be filed anytime between first. So it is not as if you have to, so probably you can put up the data in IFF and by 12th it will get locked. I am also not very sure, if you ask me, how that IFF will work, whether amendments in the IFF will be permitted, because amendment in the GSTR1 we know about. But what is the concept of amendment in the IFF? Is there any amendment in the IFF that we can do? Obviously, if the law provides that whatever is the data which is going into IFF, you cannot take it back, or you cannot again include in GSTR1, it would mean that GSTR1 and IFF is one and the same. So ideally there should be also a facility for amendment in IFF. But as of now, let me tell you, it's very premature. We will have to see how the things happen.
All right, Mandar. Thanks. The next is whether the GST department has given any utility to raise invoice as per required schema. Any utility to raise the.
If I recollect properly, government was to give a invoice generation utility, and if you go to GST portal, they have also just do one thing in GSTN. Just put GSTN in the Google. You will get the GSTN official's web page. Just subscribe to the GSTN official web page, because that GSTN official web page is very important piece of information. Whatever is the new functionality comes on GSTN web page, you will automatically get updated. So that is something which everybody who is interested in that GSTN related updates should definitely go to the GSTN web page and subscribe to it. They are very active on the social media. Now coming to your question, they have given certain list of softwares. So names of the softwares are also given. You can download that particular utility, invoice generation utility, and you can use that particular utility. But unfortunately, that utility is not available to all. That utility is only applicable to small SSs. So on one hand, if you ask me, the e-invoicing is applicable for more than 100 crores. And on the other side, that e-invoicing facility is applicable only to entities having less turnover of not more than 1.5 or not more than 5 crores, something like that. So therefore, to answer your question, that e-invoice generation facility to my knowledge is not really there. Although some links are available in the portal, it's not really there.
Okay. So the next is how to unblock e-way bill facility without filing return. Can we take time for filing return, and can department allow the same?
My experience suggests that unless until you file the return, they will not allow. They will not allow. I don't think there is any exceptional provisions given under the EWB. Means that is, I think, under section 158 B or 158E, that this particular provision has been incorporated. But to my knowledge, unless until you file the returns, So the correctness of the return in one aspect, because earlier they were not allowing GSTR 3B also. Now GSTR 1 also they have started. So I think you need to file at least, because sometimes unblocking is not in their hands. Unblocking is system driven. So the moment you file the return, only then it will allow the officer to unblock it. If you don't file the return, the officer will not get an option to unblock it. So that could be a challenge in my view.
All right. So I think these are all relevant questions for today's session. On the part of the announcement, I think though the President sir has already announced while opening of the opening remarks, but for those who have joined little later, there is one important announcement that our 54th RRC, VCS's RRC, which is quite awaited event for all the years. It is on Zoom platform, and the early bird discount is still tomorrow. So those who want to take advantage, those who want to join, because it is a very convenient time in January and at a discounted rate also. And tomorrow is the last date for early bird discount. And the schedule is the RRC schedules on scheduled on 7th to 10th of January. And the details are available on the website. Regarding hearty vote of thanks to Mandar, I think it was a nice coverage of the last 1 year. Most of us were busy in either the order, as you rightly mentioned, that the time was not good to study and all. But though you're nicely covered and given us a sort of a platter or a bouquet of flowers, which all colorful flowers, which I think time to come will be able to definitely. And the summary was so nice that if you see the really 84 and 85, all those notifications, the issue is they are so long, but you are very nicely come with the crux in the matters, and put up before the participants, and the practical issues even in the future department audits. I think you have covered that also well, and with your practical experience and small tips on that count. You have covered e-invoice 36(4) rule, which is also quite interesting. GSTR 2A and 2B comparison and how it will impact our ITC. And you have also nicely covered the GST returns and payment for small, taxpayers. So this is, as I said, this is also a small summary cursory for all of us, and would be of great help to all of us. With this, on behalf of BCS and all of us, I present a very hearty vote of thanks to you, Mandar, for your nice time and presentation. Thank you, participants.
Thank you, Dushyant. Thank you.
Thank you, Mandar.
Thank you all. Thank you, Mandar.
Thank you. Thank you very much.
Thank you. We are concluding the meeting. Thanks.